Good afternoon. The JSE All Share Index opened lower this morning following overnight losses on Wall Street. Global stocks also took a knock as markets digested the U.S. Consumer Price Index for April. U.S. consumer prices rose at an annual pace of 8.3% last month. SABC News Markets anchor Nastassia Arendse is live from the JSE. Nastassia, you gave us quite a comprehensive introduction there about what's happening in the global markets. Tell us more.
So when we look at the JSE this morning, we opened down 3.3%. That's about 2,000 points lower. And we were picking up a lot of the market sentiment that was coming in from the Asian markets. As I mentioned in my intro, that inflation figure coming in a little bit hotter than expected, 8.3% versus the consensus of 8.1%. From a month-on-month core inflation point of view, coming in 0.6% stronger. The concern is that the Federal Reserve will have to do a whole lot more to bring down inflation to 2%, which is their target. The other concern for a lot of the market participants is that inflation has moved from predominantly being in the goods side of the U.S. market to now moving to the services side as a lot of the U.S. consumers move out of the lockdown pandemic structures and start traveling and the economy opens up. We're seeing that inflation filtering through from the airlines to services like dining out. And the reason, as I mentioned, that inflation figure came in slightly below at 8.3 versus the previous month's 8.5 was because we saw a slight reprieve when it comes to gasoline prices. But the other aspect of the market that's sort of fueling that inflation is, of course, the tight labor situation in the U.S. where demand is exceeding supply. So because of that, we are seeing wage growth increase as well. But now we're looking at the European markets. A lot of the concerns is that the central banks, whether we're talking the Bank of England, the European Central Bank, or the Fed, is that even if they deal with inflation, it will be quite impossible to be able to rein it in without at least bringing the U.S. economy or perhaps even the European economy to some kind of recession or at least a slowdown. And this is concerning for markets that have become so accustomed to easy money at this particular point, and we're seeing that easy money at least come in, at least at this point. The concern is that it's going to be reined in. The other aspect is that although the Federal Reserve did increase interest rates by 50 basis points, the concern is that they may have to aggressively hike. We are expecting another 50 basis points in the next meeting. The idea of a 75 basis point hike, they did say that at their last meeting that it's not necessarily on the cards right now, but perhaps then the door might be open for 75 basis points to come back into the picture, at least if you're going to have a dent on U.S. inflation. The other concern, and it's quite an interesting one to notice, is the fact that we are seeing at least the cryptocurrencies having a strong correlation when it comes to, of course, what is happening with the equity markets. We're seeing that correlation come in when we look at cryptocurrencies. And the reason we're starting to see that move is because a lot of the hedge funds and traditional money managers were buying into the idea that cryptocurrencies can be a safe haven asset. So they have basically bought cryptocurrencies as a sort of hedge towards inflation. But now, instead of holding the cryptocurrencies during periods of volatility, they're selling. So that is why we're starting to see cryptocurrencies move in tandem with what we're seeing on the U.S. markets, in particular the Nasdaq. When we saw the Nasdaq down about 3.2% yesterday, we saw a lot of the cryptocurrencies also moving in negative territory, Bitcoin being one of them. But when we bring that picture locally and look at what is happening on our All Share index, so far the All Share index down about just over 3%, top 40 down 3.2%. We're led lower by the resources that are down about 5%, and of course industrials and financials following suit. But we're going to get into the actual market specifics in about an hour's time when we have that conversation with our market analysts to talk about some of the price action we're seeing, the red across the screen, especially as we look at U.S. equity futures right now that are pointing to an even more torrid trading day ahead, probably far worse than what we saw yesterday. So we'll definitely keep the viewers involved in that particular discussion and talk about some of the risks that markets are concerned about. And Zinga, back to you.
Nastassia Arendse just giving us insight there into what's happening. A market commentator this morning saying perhaps it would have been better to keep the markets closed.